Hello everyone, you're watching Weekly Forex Outlook by Light Forex. From this video, you will find out about the most exciting trading opportunities which exist in the currency market. This week promises to be very interesting and full of opportunities for Forex traders. So right now we will discuss them. Let's start with traditional look at the chart of the US dollar index, and here we can see that the American currency rose to the highest level since the start of the year. The USD doesn't have a lot of strength on its own. However, in comparison to other main currencies, it still looks very attractive for investors. The policy of the US Central Bank, the Federal Reserve, is dovish. The Fed's chair Jerome Powell said on Monday that there is no limit to current pause in interest rate hikes, and this should have been a negative statement for the USD. However, other central banks are even more dovish and even less eager to raise interest rates than the Federal Reserve. And as a result, this helps the USD to stay in demand. In addition, it's necessary to mention that on Friday, America published a very important piece of labor market data, and it turned out that the number of jobs added in February in America was the lowest in more than 2 years. I'm talking about the famous indicator called non-farm payrolls, or NFP. However, American unemployment rate declined and the average earnings growth was higher than expected. These two news were positive for the USD and helped the US currency to stay supported. All in all, we can say that the picture for the USD looks more or less fine. There are more events to look forward to in the upcoming days, which will determine the further route of the American currency. We see that currently the US dollar index has met some resistance, and it needs to overcome this resistance in order to continue getting higher. Otherwise, there will be some pullback to the downside. So let's now switch to the economic calendar at lightforex.com in order to see which events can we trade in the upcoming days. So on Monday, US President Donald Trump will present fiscal budget proposal for 2020. Also on Monday, the United States released some strong retail sales figures, and that was good. On Tuesday, there will be another speech of the Fed Chair Jerome Powell. In addition, Britain released GDP and manufacturing production figures, while America will publish CPI and core CPI, which is Consumer Price Index, and an important indicator of inflation. Here I also need to draw your attention to the fact that we will have a lot of events this week from Britain. This week is actually critical for Brexit, as the UK Parliament will vote on Theresa May's Brexit plan on Tuesday. It is expected that the lawmakers will reject the plan because they want concessions from the European Union, and the European Union is not willing to give these concessions. As a result, the vote on Tuesday is expected to fail. On Wednesday, British Parliament is expected to vote on a no-deal Brexit. So they will decide whether they agree to leave the European Union without a Brexit deal, without a trade agreement, or they will work on getting this Brexit agreement done. This second scenario, that they will vote to try to make a Brexit deal, is more likely. If this goes as if the things go by this route, then on Thursday there will be the third vote whether to ask the European Union for a delay. And if this vote is positive, then the Brexit will be delayed and there will be no Brexit on the current planned date, which is March 29th. And Britain will buy more time to negotiate with the European Union. This is what is scheduled for the British pound, so there will be a lot of news. Tuesday, Wednesday and Thursday will be very, very intense for the British pound. On Thursday, there will be an important day for the market's risk sentiment, as we'll get economic updates on how the things are going in China. The nation will release industrial production and retail sales figures. And on Friday, we'll hear from the Bank of Japan. There will be a meeting of the central bank and a press conference of its governor Kuroda. So although the regulator is not expected to change its policy, some important economic assessments may be out, and this may also have an impact on the currency market, on dollar-yen exchange rate in the first place. So these are the economic events, and now let's see what happens at the charts. And we return to MetaTrader. Weekly chart of the euro-dollar shows us that last week the currency pair went down. There was a substantial decline. The pair went below 200-week moving average at 1.1335 level. However, still the decline wasn't that big, as the currency pair remained above 1.12 level and managed to close there. As a result, it is too early to expect a bigger drop of the euro below 1.12. There is some scope for correction, with the broken moving average around 1.1535 acting as the point of attraction and resistance at the same time. What has happened in the euro area is that there was a meeting of the European Central Bank, and the regulator promised to keep interest rates low for the rest of the year. It acknowledged various economic risks and also said that it will launch targeted long-term refinancing operations, or TLTROs, in September, trying to support the region's banks. So we can see that the European Central Bank followed the US Central Bank in dovish policy steps, and this made traders sell the euro, although the support still held in great sense here. So we can see that the previous lows around 1.1270, 1.15, and the downtrend resistance line in the area of 1.1380 will be the main targets and obstacles for the euro on the upside as it tries to recover. So it is possible either to buy the euro somewhere above 1.13 with really conservative targets around 1.50, 1.60, 1.80, or just to wait until the euro reaches this resistance and then look for sell signals. The most interesting thing will obviously happen with the British pound here, and on the weekly chart we can see the big bearish engulfing candlestick. Although the British pound was performing really well since the start of the year, during the last week traders became worried as the Brexit deadline is getting closer and closer. And here various scenarios are certainly possible. Let's try to outline the most likely one. So if the votes go that Britain decides to delay Brexit, then the short-term reaction in the British pound will likely be positive, and we will look at a resistance around 1.3150, 1.32 and 1.3385. However, given the fact that the delay will only prolong the uncertainty, traders will likely sell the British pound on its attempt to recover, and there will be then the movement in the opposite direction. If British Parliament unexpectedly accepts British Prime Minister's Brexit plan on Tuesday, there will be a very big jump in the British pound to the upside. And if the British Parliament votes for a no-deal Brexit, then certainly the currency will plunge towards 1.24 and lower in the further trading days. So these are the main scenarios, and although there will be some economic releases in Britain, Brexit will be the most important driver here. The pair US dollar versus the Japanese yen declined last week, but found support around the weekly moving averages in the area of 110.80. So for the currency pair to get lower, we need to go beyond this level. And in this case, the further target for the downside correction will lie at 110.30. On the upside, the obstacles are at 111.30 and close by at 111.75. If we get above this level, then it will open the way up towards 112.70 mark. Let's now have a look at commodity currencies. The United States dollar made a big leap up versus the Canadian dollar, and now the pair enjoys support at 1.34. As long as we trade above this level, the next target on the upside remains at 1.3535. Decline below 1.34 may lead to a correction down to 1.33, but once again, likely the USD will have a decent support there. The Australian dollar was hurt by some news from Australia, by the dovish policy of the Reserve Bank of Australia. The currency pair found some support at 0.70, and it is risky to sell the Australian currency as long as it is trading above this level, as it may actually recover to the area of 0.7130, which we can see here on the chart. Below 0.70, the decline will open the way to more significant downside targets. New Zealand dollar versus the US dollar met support of 200-day moving average at 0.6745, recovered from that level, and as long as it stays above 0.68, the focus will be on the upside, 0.6850 and 0.69 levels. The main support is located here at 0.6750 area. Gold made a leap down, then it returned higher, but the key resistance is at psychological level of 1,300, and as long as we stay here and also below the moving average at 1302.65, the outlook will be negative and the level of 1275.50 will continue to remain in focus. only above 1305 will we have the next target higher at 1320 area. And Brent oil found some support in the area of $64 a barrel. Saudi Arabia said that it is set to extend deeper than agreed cuts next month, so supply will likely be limited, and as a result oil will have the chance to resume the uptrend and return to the 68 level. And finally, Standard & Poor's index corrected down last week, but it found some good support around 2740 area, here the moving average. And given the fact that the Federal Reserve is keeping policy dovish, this will help US stocks to try to recover from the current levels and test higher points. This is all for today. Thank you for your attention. And trade with Light Forex to make money on these immense profit opportunities of the Forex market.